All right, guys, welcome back to the channel. Today we're going to talk about insured finance and what are they looking to do. All right, guys, so this project is similar to Nexus Mutual. If you guys don't know what Nexus Mutual is, I'll give you a quick overview. But guys, if you're new to the channel, go ahead and smash that like button and tap that subscribe button and turn on those bell notifications. That way you guys get notified every time we make a new video and talk about a new project. And we talk about a lot of altcoin gems, but anyways, guys, we'll bust into it and talk about it. So what is insured finance? So basically it's building the future of digital asset insurance. So again, like I said, we're going to go ahead and go over Nexus Mutual so you guys can grasp the concept. Basically what you do is you have a smart contract that allows you to, it's a smart contract that allows you to purchase insurance for smart contracts. So it sounds a little confusing, but basically it's really simple. You can buy the Nexum and you use the Nexum tokens to purchase the contract. So what you do, it's really easy. You get a quote. You can choose any of the different protocols. So say, for example, you want to purchase it for Kraken, Gemini, SushiSwap. All you do is you hit select. You select the amount of ETH you want to cover, the amount of days, and then you get your quote. It's that easy. Well, you do have to go through a KYC on this one, but that's similar to how the protocol works. Now you're asking, why in the world are you talking about Nexus Mutual? I thought you were going to talk about insured finance. Well, insured finance is not mainnet. So I was showing you that overview so you guys can kind of get an understanding of what they may be looking at. This is not financial advice. This is just my opinion on the project and what I see. Well, let's go ahead and talk about insured finance. It's only about 8 days old. It is currently, well, it doesn't even have the market cap on here. The price of the token is about 38 cents. It says an all-time low of 33 cents, but the private sale or the public sale was 13 cents and the private sale was like 6.8 cents or something. So the early investors are already in a pretty good profit right now. Let me go ahead and get you guys on the website. So it's building the future of digital asset insurance. Now this is how they separate from Nexus Mutual. Nexus Mutual has a massive pool or one pool for all their smart contracts. So it's easily hackable. Someone can easily just say, oh yeah, I'm going to go ahead and just steal the keys or figure out how to hack this wallet and steal all of the treasury. So that way, if the treasury is deleted, then it's like, what in the world? It's got, well, nothing. There's no backing for it because there's no money to cover the protocol. So what's the point of having insurance if there's no money in it? And you just paid in for them to cover. Well, they can't cover. So how they separate here is they have separate wallets or separate treasuries for separate contracts. So if I make a smart contract to have an insurance pool for this, then they're going to make one wallet for or one treasury for that. And then if Johnny goes ahead and makes his own contract, it's going to be an entirely separate pool for that one. So it's separate pools. That's what sets it apart. You can get smart contract coverage. So this allows to protect against bugs, exploits. And so say, for example, someone's on the MakerDAO hack where they just basically printed unlimited tokens. I mean, guys, you need insurance. I mean, there's so many different crazy things going on, and it's to the point to where all the DeFi protocols are saying, oh yeah, there's a possibility that there could be a hack or bugs, so use this with caution. It's like saying, hey, look, if you want to deposit your money in our bank account, well, please use with caution because all the money you deposit in here, you could lose it all. Well, that's definitely dangerous. Protects against stablecoin failure. So we know there's tons of people in stablecoins right now, especially when they're just exchanging between Bitcoin, Ethereum, or playing around with the different DeFi projects. It also protects against rug pull. So if rug pulls happen, if a project is like, yeah, we're the next big thing, and then they just pull out liquidity and it's like, wow, what a ripoff. So guys, it's basically an insurance protocol and it's built on the Polkadot ecosystem. I mean, that's all you got to say. That's a huge buzzword, Polkadot. I mean, we all know Polkadot literally just 4 or 5x within a matter of a week. What was it? A month or 2 weeks ago. It's crazy. So they give instant payouts. They're fully collateralized, and they have the benefit with market-based pricing. So instead of having like a counterparty who is rewarded if you're overpaying on it, the insured finance it's decentralized, and it's going to give you what you're due instead of ripping you off in the end, saying, "Oh yeah, no, it's not worth that much. You should only be able to get this much." So here's the current challenges with the current DeFi protocols is there's limited insurance pools. So like I told you, there's multiple insurance pools on this one. Instead, with the previous platforms, there's only a set amount. And here you can even create your own pools and say, hey, yeah, we should have an insurance pool for this. This is a governance token. So when you hold into the token, you're actually able to select on that. And actually, if you have 10,000 of them, you can actually participate in the early incubators like on DDIM or Polkadot. It allows you to be whitelisted, or your address to be whitelisted, so you can be first in. Everyone knows those pools sell out within seconds. Another thing is unacceptable pricing and collateralization. You guys can look at other insurance pools and you could see that they charge ridiculous rates, and it's like not even worth it. And then even complicated claims. So there's a bunch of them that'll have a bunch of fine print that says, oh yeah, you can get a loan on it if it goes to 10%, and if it jumps through hoops, and if it eats breakfast at the same time and chews gum, then you can get your claim. No, there's not fine lines. You can literally see exactly what it is. And then obviously protocol limitations. So you have high fees on Ethereum-based ones. Again, this is built on Polkadot, so you don't have to stink in, if you're trying to get an insurance policy for $1,000 plan, you don't have to spend $200 worth. I mean, geez, you're spending like 20% of it in fees. With Polkadot, well, the fees are going to be like ridiculously low. So now you're thinking, well, if it's not on Ethereum, then how am I supposed to get any smart contract protection for my Ethereum tokens? Well, this is how you do it. There's a bridge, and you can easily just go on layer 2 solutions. And if you guys haven't heard about layer 2 solutions, there's a couple videos on my channel you guys can watch. Check out Loopring and check out Matic. Those are pretty, those projects are gangbusters, man. They're nice. And then obviously you have side chains like XDAI Stake. Sweet stuff. Here's even a clip from Ivan on Tech talking about insured finance and how they're a bit different.
So basically, what they do is that they partition funds among separate contracts. The design of insured finance marketplace allows the collateral for each insurance agreement to be stored in a separate contract. So if there is some problem, there is never that all funds get drained at the same time, which many other insurance protocols have this problem, where all funds are pulled into one contract or from different agreements, and then when something goes wrong, everyone is wrecked. No, here is one agreement, one contract, one agreement, one contract. So that's important. Superior security is not the only benefit. It's been an action-packed week for holders. So you can read more updates. I don't want to go into detail, but you get the point. It's important to have, for me at least, how I'm thinking, I need my horse everywhere, on security. So basically, what they do is that they partition funds among separate contracts. The design of insured finance marketplace allows the collateral for each insurance agreement to be stored in a separate contract. So if there is some problem, there is never that all funds get drained at the same time, which many other insurance protocols have this problem, where all funds are pulled into one contract or from different agreements, and then when something goes wrong, everyone is wrecked. No, here is one agreement, one contract, one agreement, one contract. So that's important. Superior security is not the only benefit. It's been an action-packed week for holders. So you can read more updates. I don't want to go into detail, but you get the point. It's important to have, for me at least, how I'm thinking, I need my horse everywhere, on security.
So you guys can kind of see, I already explained it with these separate contracts, but anyways, let's proceed with the video. The solution's decentralized peer-to-peer, so you can get coverage or cover others. So it allows it in a peer-to-peer marketplace. So if you're wanting to be that insurance provider, you can actually stake your tokens and provide insurance for other people. Vast coverage capabilities. So it allows you to cover multiple things, and instead of just saying, oh yeah, we'll do this, this, and this, but you have to do a KYC for each one. This one doesn't have a KYC. So it's almost a decentralized, well, it is a decentralized insurance pool. It's crazy. You can earn yield. So those that provide coverage earn a return on their funds. So we already explained how the person, if they're doing the peer-to-peer, they can earn a staking reward. And I'm sure they get a portion of the fees. Infi token holders also earn returns. So the funds in the insurance contracts are allocated to stable investments and returns are distributed. So they're going to be investing in stable This is what they claim. Obviously, this is in testnet. So invest at your own risk. Remember, all the money you invest in this, assume you're going to lose it. If you 10x it, great. If you lose it all, that's your fault. So it's the same thing. It's your fault as well if you 10x it. So here we already saw they're public. They have the token private sale. In Q1 2021, they are planning on token launching, listing on exchanges, etc. So this is really a baby project right now. It's like 7-8 days in. But do keep in mind, this is really important right here. Here's the token economics. Their current supply right now is about 5 million. They're about to release another 25% for the angel investors and the seed round. So 25%, that's going to release, what is that? It'll probably be about another 3 or 4 million. No, even 20% of the private round as well. So let's see. You can assume that the token supply is probably going to double from here. So there is probably going to be a good buying opportunity coming up after 30 days after the listing. So me personally, I would wait to see what happens, but not financial advice, is just my opinion, just seeing that the token supply is literally going to double in 30 days. So keep that in mind, guys. The initial circulating supply, 5,150,000. We just explained that. And the liquidity for the token is going to have about 55 million in circulation. So 5 million in the initial exchange and 50 million for the liquidity provider. If you don't know how to provide liquidity, I did a video on how to mint the LP tokens, provide liquidity on MetaMask, and you'll get part of the fees on that. So here's the reserves, 10% or 10 million for growth, 2.5 million for bootstrapping, and 2.5 million for the staff. They're also going to spend to get money for, or save some tokens for spending to get partnerships. The team, they have about, we'll just call it about 20 million for the team and advisors. It says 18 million, but we'll just call it 20 million. So they do have a good portion of it. It's not 20%. They have about 16, 17%. It's fair enough. So they have enough stake to where they have an incentive to help the project grow, and then they also don't have too much to where they can just pump and dump it. So that's really Insured Finance in a nutshell. You guys can look over their roadmap, see what they're doing. Here's a couple of their investors and partners. This is also pretty interesting. They aren't very shy about talking about what they're looking to do and how they are changing the ecosystem. So say, for example, they actually compared their stealths, or they talked about, like, for example, Wall Street bets, coordinating leverage short positions. So mainly like, hey, look, if you're at a smart contract risk, look, if you invested in us, you would have been protected, or not invested, but had a plan with us, you would have been protected. So mainly just saying, like, look, there's so many possibilities, and be careful with what you invest in. You need insurance, kind of explaining their use case. But let me go over this part. So this is important. So Nexus Mutual provides coverage for less than 1% of the total value locked in DeFi protocols. There's still 99% of the market share out there. So there's plenty of room for other insurance solutions. And on top of that, you can't really just get the Nexus Mutual token freely. You have to actually go straight through Nexus Mutual in order to buy the token. And you have to exchange Ethereum for it. So Insured Finance also addresses potential security risks in their platform by storing the collateralization for each claim in a separate contract. This is huge, guys. I know I've said this a couple times, but with Nexus Mutual, they only have one storage system for it. And that's an issue because someone can easily just hack that. So they actually did have a hack on that. So Hugh Karp had 8 million drained from an Ethereum wallet after fellow Nexus Mutual member uncovered how to exploit his address. Guys, it happens. It's out there. I mean, it's almost like you need insurance for the insurance. Anyways, let's go ahead and get you guys with a wisdom one-liner. Proverbs chapter 28, verses 3. A ruler who oppresses the poor is like driving rain that leaves no crops. It's very important, guys. You can't always just keep oppressing the poor. There's going to be a point where it's like, well, if you're going to punish them or hurt them so much, and it's like, well, you aren't going to have any workers. I mean, think about it. If all the high investors or wealthy individuals, like for example CEOs of companies, they wouldn't let their workers work or didn't treat them nice, they wouldn't be able to grow. So guys, take care of your employees, take care of your workers, and they're helping you run the business. They're helping you build it. So if you guys are running your own business, keep that in mind. And if you guys aren't running a business and have a family and have kids, it's the same exact concept. Don't oppress them. Help them build your family. Always encourage them. Thanks for watching, guys. We'll see you in the next one. Thanks for watching, guys. If you guys are new to the channel, go ahead and hit that like and subscribe button and hit that bell notification. That way you guys can be ahead of the game every time we make a new video. If you guys are new to cryptocurrency, don't know where to get started, don't know what to invest in, well, participate in the triple threat. The first thing, set up a Celsius account. This is for your savings. This is where you're going to store your cryptocurrency and you can earn interest. It can be up to 5%, 6%, 10%, and they even have some as high as 17%. Here's a referral link. Use this referral link in order to get 20 bucks in free Bitcoin. Part 2 of the triple threat is to get a crypto.com. Crypto.com account is one of the best places, especially for a beginner, to buy cryptocurrencies, or smaller altcoins. So now you have a savings account. Now you need to get a cryptocurrency wallet that allows you to buy those smaller altcoins like your Engine coin, your Raven coin, just like smaller alts, so you guys can participate in those big plays. My referral code is down here. If you use this, you'll get 25 bucks free. And the next one is Voyager. Voyager is awesome. There's a list of different cryptocurrencies you can use. What I like about Voyager in particular is you can actually make your next level up in buying cryptocurrencies. You can actually buy Bitcoin with a limit order. So you just hit buy Bitcoin, hit limit, and you type in how much you want. Boom, you're off to the races. So you don't have to watch it and make sure it's a good buy. And here's a referral code you guys can use to get some free cryptocurrency. This will allow you to get $25 for free. Can't beat free. And then obviously this is just a fun one, so you can get free cryptocurrency, is going on Lolly. You get a daily stack. All you do is you tap the treasure chest and you get free sats, and it's literally free. One of the days I literally got 20 bucks in free Bitcoin. Look, 101,000 sats. Pretty cool.